So I would expect that most options traders, and myself included, definitely don't have the time or even the desire to be glued in front of your charts all day, every day, right? We all should hopefully have lives outside of trading. And so that's why in this video here, I'll be showing you the 5 best ways to use the alerts feature in ThinkOrSwim. And as you'll see through all the examples I'll show you, this is definitely a very powerful tool in ThinkOrSwim because it allows you to minimize the amount of time you should be in front of your screen, making new trades and managing your current positions. So basically it allows you to introduce a lot of automation into your trading, which I think is very, very useful. And so in particular for this video, those 5 best ways of how to use alerts that I'll be showing you are going to be as follows. Number 1 here, we'll start off pretty easy, and I'll discuss your basic stock pricing alerts. So these are very useful in helping you to pinpoint your trade entries or exits simply based on the price of the underlying stock. Then number 2, I'll talk about stock implied volatility alerts, which are also very useful in helping you pinpoint more accurately your trade entries and exits, but also helping you to figure out what kind of trading strategy that you should use. And specifically helping you differentiate between when to buy options, perhaps when implied volatility is low, and when to sell options, when implied volatility is high. Then number 3, I'll show you some examples of option pricing alerts, which you can use to notify you on whether to take your profits or cut your losses, all based on the price of a specific option contract. Then number 4, getting a bit more complex here, we'll talk about option delta alerts. And these alerts are very, very important for risk management, in particular on either a single contract, for example, if you just have a call or a put, or also perhaps for a specific portion or one side of a more complex strategy. And then finally here, number 5, I'll walk you through complex option spread alerts. So this is basically the culmination of the previous topics I've mentioned here. And you can use these alerts for pinpointing your trade entry and exit criteria, profit taking, stop losses, as well as risk management on multi-leg option trading strategies. So not just for one single contract, but for example, if you have a put credit spread on, a short strangle, an iron condor, anything like that. Now, as always though, before we dive in and I walk you through all these examples, in case you are brand new to the channel, my name is Scott Reese, and I'm here to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And in case you want to see more trading or investing content after watching this video, you can also find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. All right, and so with that being said, at this point, we're going to jump on over to ThinkOrSwim here and we'll get things started. All right, guys, so first off here, we'll begin very simple and we'll take a look at your basic stock pricing alerts. So these are very useful if you want to be notified simply when a stock reaches a desired price point. And when the stock does reach your desired price point, you can then use these alerts to notify you when to make a certain trade or perhaps when to get out of your existing trade, either for profits or to cut losses, things like that. And so in the case of AMD here, this will be my main example in this video. To create a stock pricing alert, it's very straightforward. We simply have to click on the current price of AMD right there and then go to create alert. And that opens this window right here where you can set all the configurations for the alert that you want to make. So in this case here, I want to make an alert on AMD stock in particular. We'll talk about options and option spreads a bit later. And then in particular, I want to get notified if the mark price of AMD stock is at or above a certain price. So right now AMD is trading at around $85 per share, but perhaps for whatever reason, I want to wait to see if AMD gets to a price of maybe $90 per share before I make or exit a trade. Now, a few things to mention here. Number 1, what exactly is the mark price? I've talked about this a few times in previous videos, but in case you don't know, the mark price for a stock or an option or any other kind of asset in financial markets is the price directly in the middle of the bid and ask prices. So in this case here with AMD, you can see the bid price here with a capital B is $85.72, and then the asking price is $85.76, although these numbers are changing pretty quickly here. Now, AMD is a very liquid stock, so that's why the bid and ask prices here are very, very close to each other. But still, the concept of mark pricing remains the same. It's also referred to as the fair price. And again, that price is determined by going right in between the bid and the ask here. So bottom line, the mark price of any stock or option is basically the best measurement of the current fair price for that product. So that's why for my alerts here and also for my trades, I always use mark pricing. And then secondly, here you have this option in the middle, which by default is specified to be if AMD is at or above $90 per share, but you can also change this. So you can click on this button here to open a drop-down menu. And if you wanted to be alerted if AMD was strictly above $90 per share, not also equal to $90 per share, then you can select this option as well. And then conversely, if you wanted to wait and see if AMD would drop further below its current price of $85 per share, you can simply change this to perhaps, let's try 80. And then you would also change this middle option right there to specify that you want to get alerted if AMD stock is perhaps at or below $80 per share or strictly below $80 per share. And then once you have all that configured, you can come down here and click on this drop-down menu. And this is where you can specify how you want to get notified. So for me, I get notified in two different ways. Number one, I have ThinkOrSwim here in my desktop play a sound. It's basically a little bell sound that gets paired with a notification in the top left-hand corner here. And then also I get a push notification to my cell phone as well. And then finally, you just come down here and click create, and that's it. So hopefully that was pretty straightforward to create your basic stock pricing alerts. But now in the case for options traders, there are a variety of different ways that you might also want to get notified. And one such way could be in regards to the implied volatility for the stock that you might want to trade. So in the case of AMD here, let's come down below and take a look at the implied volatility chart for this stock. And in case you're not aware, the implied volatility for any stock or ETF is basically a measurement of uncertainty about that stock's future. And essentially this measurement is used in part to price option contracts. And in particular, with greater uncertainty and higher implied volatility, you're also going to have greater option prices. And then conversely, with lower implied volatility, you're going to have much lower option prices. So therefore, in regards to option traders, it makes sense for an option seller to wait for situations of high implied volatility and high option prices to sell those contracts and make the biggest profits. And then for option buyers, it makes sense to wait for implied volatility to be very low, right? Because again, in those kinds of situations, those option prices are going to be very cheap and affordable to buy. So coming back to the implied volatility for AMD here, as you can see right now, the current level is 72%, which if we compare it to the past year here, is definitely on the very, very higher end of the range. So once more, this means right now is a good opportunity for option sellers to be selling options on AMD. But what if perhaps I wanted to wait for implied volatility to come back down, perhaps to a more normal level, and at that point I wanted to maybe buy an option on this stock? So judging the IV based on the past 6 months or so, it seems a pretty average or normal level for AMD in this case is roughly around 58% or 60%, somewhere in there. And so instead of having to check my charts every single day to see if the implied volatility for AMD is coming back down, I can simply set an alert. So once more, I come up to the current price of AMD and click on that and then go to create alert, same as before. And then this alert here is still going to be based on AMD stock, but instead of the mark price for the stock, I can now click on this button here to open up another drop down. In this case, I can click on the vol index, which right now, as I showed you on the chart down below, is around 72% currently. And if I wanted to wait for the IV to come down to perhaps maybe 60% before I considered buying an option, then that's exactly what this alert is going to notify me about. So if and when the implied volatility, also referred to as the vol index, is at or below 60%, then let me know. Or in the case of an option seller, if I wanted to wait for the implied volatility to expand further, maybe to perhaps 80%, then again, let me know. And you can see in this case here, the alert knew to automatically switch this middle configuration right here to now be at or above 80%. And then finally, once I have all that set, I just come down here and click create. All right, so at this point, we've covered the two alert types specifically relating to stock, but now what about alerts relating to specifically option contracts? So for example, what if you wanted to get alerted if the price of a certain option reached a specific price point? Well, to do that, it's also very simple. So now I'll come over to the trade tab on AMD and pull up the option chain here. And so for example, let's go into the May monthly expiration cycle with 22 days left to go. And so given that AMD has come down a lot in the past couple weeks here, perhaps I'm feeling pretty bullish on the stock. And as a result of that, I went ahead and sold maybe the 80 strike put option here for about 330 some odd bucks as a starting credit. And so once I make that trade at that point, perhaps I want to set up an alert to notify me if the price of that particular put option contract either drops down to my profit target or perhaps increases if AMD continues to fall even further and it reaches my stop loss point. And so now at this point, I can right click on this option and then go to create alert, same as before. But because I did it this way, the alert is now already configured to alert me based on the AMD single 80 strike put option here. And also double check the expiration date here, May 20th of 2022. And yes, indeed, that is the exact expiration cycle I'm looking at here. So again, in my example there, if I initially sold this put option for a starting credit of about 330 bucks, then perhaps with this alert, I want to get notified if the price of that put option drops by 50% or down to a price of 165. And there we go. Let me know if the AMD 80 strike put option in the May 20th expiration cycle specifically has a mark price that is at or below $1.65 on a per share basis. And then after that, I simply come down here and click create once again. But then also, what about a stop loss alert as well? Right, for example, if AMD continues to drop even further from where it is right now, then the price of this 80 strike put option is going to increase more and more and more. And as a result, I'm going to incur some losses. So what if perhaps I wanted to set my stop loss point to be 3 times my initial starting credit? So basically, if the price of that put option contract goes from 330, where I sold it initially, to a price of 990, then again, if the mark price of this contract is at or above that price, let me know. And at that point, I can come back in here and buy back the contract and cut my losses. But now also, because option pricing is very dynamic, there are different ways you can set alerts on a specific option contract. And I think one of the most important things that you can set an alert on as well is the delta of that contract. Right? So for example, with the same 80 strike put option I showed you previously, the delta on this contract right now is 30. Right? You can see in this column here, these are the deltas of all these individual option contracts. And the delta of any option tells you how much risk that you have on right now with that position, because the delta in particular tells you how much the price of that option contract will move for a $1 change in the stock price. So in this case, with this 80 strike put option, if AMD increases in price by $1, then the price of this put option is going to fall by about $31. And that's going to be a good thing for you if you were the seller of this option contract. But then conversely, if AMD falls by $1, then the price of this put option is going to increase by about $31, which again, as an option seller, means you'll be down or you'll have lost that amount of money. So hopefully in that context, it makes sense that the delta of your contract basically tells you how much risk that you have on right now with that position. Moreover, as you can see by looking at these surrounding option contracts, the deltas definitely change. In particular, the options that are closer to being at the money, or basically with strikes that are closer to the current trading price of AMD, they all have much higher deltas and therefore more risk. And then conversely, with options much further away, the deltas are much lower and have much lower risk. So ultimately, that means right now my risk on this put option is about $31 for every $1 move in AMD, but this risk is going to change as AMD does move. For example, my risk will increase if AMD moves against me or moves down, or the risk will decrease if AMD does move higher. So therefore, if you wanted to create an alert that would notify you based on the delta of your contract, basically to let you know when the risk on your position has moved by a certain amount, you can also do that. So once again, I can right click on this put option and go to create alert. And once again, this alert is already mostly configured regarding that put option, but now in this case, I don't care to be notified based on the price of that option. So now I can click on this button once again and go to the delta of the contract, which you can then see right there. It's currently about 31 or 32. So now perhaps I want to get notified if the delta of my contract doubles and goes to negative 0.6. Right? Because again, that means my risk on the trade will also have doubled. And perhaps at that point, I want to make an adjustment to this trade to decrease the risk. And just as a side note, one way I can do that is by selling an out of the money call option, where basically the delta on the call option will serve to offset in part the delta on the put option here. And again, once I have this alert configured, once more, let me know if the delta of that put option contract is at or above negative 0.6. At that point, I come down here and click create. And then finally in this video, I want to also show you how to create alerts based on your entire option position, not just one specific contract, but if you have, for example, an iron condor on, or a credit spread, a short strangle, things like that, you can also set alerts based on the entire price of that full position, or based on the combined deltas of all those option contracts together, anything like that. And for this one, let me show you a real example based on a current position that I have on right now. And so I'll come over here and go to IWM. This is an ETF that tracks the Russell 2000 index. And so also in the May monthly expiration cycle, if I scroll down a bit here, as you can see, I'm short a strangle with a 187 strike put option and also a 197 strike call option. Now, originally I was short the 214 strike call way down here, but because IWM has sold off so much and now it's currently below my put strike and therefore the delta on this contract has increased substantially, that's why I made an adjustment. So again, my risk on this side of the trade has increased by a lot, and so that's why I rolled down my call to now the 197 strike, because this contract has a 22 delta, which is serving to counteract the delta on my put option by quite a bit, right? Because basically if IWM goes lower by $1, then the price of this put option is going to increase by 51, which means I, as the seller of this option, will lose $51 on this side of the trade, but also this call option is going to decrease in price by $22, and that's going to be profitable for me. So ultimately, if I lose about now $52 on the put option, but I make 22 on the call, the net effect is I lose only 30, not the full 52. So now after making this adjustment, my risk on the trade is now in check, but if IWM does continue to push even lower and lower, then the delta on this put option is going to continue to increase, and the delta on my call will continue to decrease, and as a result, my risk on the whole position is going to get larger and larger, which then may warrant another adjustment. So basically the point I'm getting at here is I can create an alert to notify me if the total combined delta of my full strangle here reaches a certain point. In this case, currently the combined delta is about 30, right? 52 minus 22 is 30, but perhaps if it does increase again to above 50, at that point I want to get notified and then make another adjustment. So once more, I can right click on either my call option or my put option and then go to create alert. And in this case, we're going to have to change quite a few things here. So still IWM, but now we're dealing with two contracts. So instead of a single contract here, let's click on this button and open a drop-down menu. Now I need to go to strangle. And then step 2 is to click on this button right here. And there's two things I have to configure. Number 1, the expiration date, and then number 2, the strike prices. So the expiration date here for both of my contracts is the May 20th expiration right there. And then for the call option here, I'm short the 197 strike. There it is. And then for the put option, I'm short the 187 strike right there. Great. And then step 3 is to configure the exact method by which I want to get notified. So currently it's set to the price of the full strangle. So in a similar fashion with that put option, I can create this alert to notify me if the price of the full strangle reaches either my profit target or my stop loss point. But in this case, I want to change it based on the delta. So like I was saying, the combined delta for this full strangle is about 30, right? Because once again, 52 minus 21 is exactly 31. So if perhaps the combined delta on my full position here reaches or goes beyond 0.5, then definitely let me know, and perhaps I'll roll down my call option again to reduce my risk once more. And then conversely, if IWM totally turns around and starts to increase in price, and perhaps if it blows through my call strike here, in that case, I'm going to start having more unbalanced risk to the upside, in which case I can create a second alert here to notify me if the combined delta is at or above positive 50. And that's because whenever you're dealing with put options, the deltas are always negative, and whenever you're dealing with call options, the deltas are always positive. And there we go. Final step is to simply click create, and then I'm all done. And so there you go. Those are the 5 main ways you can use alerts in ThinkOrSwim. And like I mentioned, there are plenty of other ways you can use alerts or configure them to your specific needs. But ultimately, I think these 5 approaches are going to be pretty comprehensive for most use cases. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.